Welcome back. You're still tuned into Markets at Lunch on ET Now. And let's now put the spotlight on the entire infrastructure sector because lots happening over there. And to discuss that, we are now in conversation with Mr. Krishnan Seetharaman, Chief Ratings Officer at CRISIL Ratings. Sir, thank you so much for taking your time out. And remember, he's joining us from the sidelines of the conference of the Infrastructure Summit. If you can take us through the key takeaways from the conference, what are you gathering from your interactions with the industry leaders and industry experts and the trends that are emerging in the entire infrastructure sector?
Hey, good afternoon, Ashesha. Thank you so much for having me on the show. Good afternoon, everyone. I would say that the infrastructure sector today is in a sweet spot in the country, and it's benefiting from the government's policy push. And I personally feel that there is a government focus on the 4Ds. That is diversification into clean energy, decarbonization, digitalization, and debottlenecking. Now, these policy measures from the government are giving tailwinds to the infrastructure sector. And today, our spotlight is on 4 key infrastructure sectors, that is renewables, roads, real estate, and some of the new age infra sectors. Now, we expect the Capex for the 4 key infrastructure segments that I spoke about to grow around 45 to 50% to touch rupees 24 lakh crores in 2 fiscals, that is by March 28. And that will be well above the overall infrastructure Capex growth of around 30%. Now, within the 4 key segments, while renewables, roads, and real estates are traditional segments and will continue to see Capex at a healthy growth at a healthy pace. Now, Capex for the new age sectors, such as data centers, smart meters, battery manufacturing, and green hydrogen, which is generating a lot of excitement among industry players. That is expected to almost triple over the next 2 years. But of course, that will be on a lower base, and their contribution to the overall Capex will not be too high. But overall, I think there's a lot of excitement related to the infrastructure sector. And while I've been tracking both the financial and the infrastructure sector over time, if you go back, say, 15 years, infrastructure sector was not the darling of the investors as it is today. And if you look at the bank balance sheets, the bulk of the NPAs were in those days contributed by infrastructure sectors like power and roads. But it's a far cry today. The overall ecosystem for infrastructure players has changed. The government's policy initiatives have been supportive, and hence both debt investors and equity investors in the sector are kind of having a much more positive mindset today. Over to you, Ashesha.
Clearly, we are seeing a lot of traction within the infrastructure sector. And as you rightly mentioned, it was not investors' darling back then, but perhaps we are seeing a lot of action emerging yet again. And one of the sub-segments that you spoke about was also the renewable sector, and that we are seeing fresh investments in this sector. Your thoughts on where and on the kind of trends that we are seeing within the investment, within the renewable energy sector going forward, and where this sector is headed going forward?
Sure. The renewable sector is one of the key pillars of our infrastructure growth story. And it is benefiting from one of the Ds that I talked about, diversification into clean energy. It continues to benefit from the strong government focus on capacity growth. And we expect an addition of 105 to 110 gigawatts over the next 2 fiscals. Now, this will be led by existing utility projects and a conducive policy push for C&I, that's a commercial and industrial segments. And also, we are seeing a good growth trajectory on rooftop installations. So all in all, in the renewable sector is a good growth story, and we expect that to continue.
Let's also talk about the traditional residential and commercial sub-segments within the entire infrastructure sector. We saw that post-COVID boom come in for luxury real estate. What kind of trends are emerging for both commercial as well as residential real estate?
Sure. So the real estate sector is another critical pillar of India's infrastructure story. And I usually take this analogy, which is roti, kapda, and makan. These are the 3 important basic essential requirements for any person here. And makan is part of real estate. So that essential demand will always continue to be there, maybe a little bit up and down, but strong domestic demand will continue to support it. So today, if I look at the real estate sector, we split it into 2 parts. One is the residential segment and the other one is the commercial segment. We are seeing somewhat of a divergent trend between the two. Now, the residential demand, as you rightly pointed out, post-COVID has seen a very sharp upthrust. And what we are seeing is the last fiscal or so, in terms of the demand volumes, that has remained flattish because the capital values, the prices, they have become elevated, though the base has gone up a lot. And what we are now seeing is while the demand volume in terms of unit sales, that will be flattish, but price growth will still be there to 3 to 5%, which will have somewhat of a growth in the sales value. Because what we are seeing is premiumization is playing a key role, as against maybe 5 years back, the affordable segment used to constitute nearly 40% of total launches. Today, that is around 10 to 12%, and premium and luxuries around 40 odd percent. So that way, there is I would say, a paradigm shift in the type of launches that we are seeing, and hence premiumization is happening. That will drive sales value growth. On the other side, if I look at the commercial segment or the office segment, that is seeing a very healthy demand on account of leasing. We are expecting around 6 to 7% growth in the current and next fiscals. And that is being supported by flexible workspaces, the BFSI segment, and also global capability centers. And that has meant that vacancy levels in these properties that are steadily coming down. We are seeing occupancy at around 90 to 93% today. So all in all, again, a decent story as far as real estate.
Clearly, and premiumization is one trend that we're seeing shape up within the real estate sector. But thank you so much, Mr. Seetharaman, for taking your time out and joining us here on ET Now and helping us understand the latest trends that are emerging within the entire infrastructure sector. But that's all the time we have in this edition of the show. Thanks so much for tuning in. Market Fatafat will come up next.